Welcome, and I hope that you are having a fantastic day. Today we're going to talk about cryptocurrency investing for beginners, Bitcoin. Am I too late? Have I missed the boat? Did that ship sail without me? We're going to find out. Now, if you've watched my channel, you probably have a good idea of the conclusion that I'm going to come to, but let's get into it anyway. Our Cat Blue has a challenge. Can we get 99 likes on this video? You can help by clicking the like button. And this is my disclaimer. I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You're smarter than you realize. Do not trust what I say. Do your own research. We're going to look at a couple of different articles. I'm going to include links to those articles so that you can do your own research by starting with the articles that I share with you today, because I only cover a brief section of articles, and this will give you an opportunity to dig into the details of it if you want to. And then, of course, you can always use that article as a jumping point to do more research on the internet. So we're going to talk about three different subjects today. The first one is Bitcoin's $10,000 price. You know, when I talk to friends and relatives, I've had several people tell me, oh, Bitcoin's around $10,000, too expensive. I'm not going to invest. I don't think the price is going to go up because it's at $10,000. And so since people seem to think that that's a reason not to buy Bitcoin, we're going to talk about that a little bit, because that has to do with, are you too late? So is this $10,000 price a valuable and legitimate reason not to invest in Bitcoin? We'll explore that. The second one is we're going to look at institutional investors, or whales, and then we're going to conclude by looking at retail investors. So let's get right into it. Now, this is a simple growth chart. You'll see this when you look at the way things have grown in the past. Like if you look at email usage and how email usage at one point almost nobody uses it, and then today a majority of people use emails. Or if you look at the internet, one day the internet had practically nobody on it, and today a lot of people use the internet. Or companies like Amazon, Apple, Microsoft, etc. They went from nobody using their product to lots of people using their product. And so the first area that we need to ask ourselves is, where do we think Bitcoin is on this chart? If Bitcoin is here where it's already reached mass adoption, and we're not going to see very many people adding to Bitcoin or getting into Bitcoin as a result, if it's already reached this pinnacle where the majority of people who will ever get into Bitcoin are already in Bitcoin, then you're right. It's probably not, you probably are too late for Bitcoin. But on the flip side of the coin, if Bitcoin is still in this area down here, or even somewhere in between, where the majority of people that are going to use Bitcoin have not gotten in, then there's still a significant opportunity. Now, based off of the actual numbers, when you look at how many people there are in the world, there's about 7 billion, that's with a big B, people in the world today that are alive today, versus how many people are actually invested in Bitcoin. We're somewhere, there's lots of different figures thrown around. I've heard anywhere from about 20 million people to 50 million people. Part of the reason why it's so hard to tell is, one, a single person could hold multiple Bitcoin addresses. And then two, when you look at an exchange, that exchange may have one Bitcoin address, but they may have millions of people that are active participants on that exchange that are actually sharing the value of the Bitcoin held in that one address. You know, because most exchanges only have a handful of addresses. They don't create a Bitcoin address for every single person that's using their exchange. Instead, they have the bulk of their Bitcoin in just a few addresses, and they track how much Bitcoin you own in a separate database that has nothing to do with Bitcoin addresses and ledgers and so on. And so there's some instances where a single address may be used, like a single person could have multiple addresses, or a single address could have multiple people. And so that makes it very difficult to come up with realistic numbers. But based off of even the higher values of 50 million people having Bitcoin addresses, that puts Bitcoin way down at this end of the spectrum, which means even though it's at a $10,000 price, when we go from only 50 million people having Bitcoin to say 500 million or 5 billion people owning Bitcoin, we'll have gone up this path to a larger number. Now, I don't see how we could possibly go from only a few people owning Bitcoin to a lot of people owning Bitcoin without the price going up significantly. Now, this is just my opinion. This is not financial advice. But based on what I've seen, every time we see more and more people getting involved with Bitcoin, as the number of people increase, so does the price. Or said in another way, as the amount of dollars flow into Bitcoin from people purchasing it, it naturally pushes the price up. Think of it kind of like this. If you had real estate and you put your house on the market, you're going to sell your house, and you had only one offer in a 10-month period, you'll probably sell the house for less than you wanted to. But if you have 10 offers in a 1-month period, or even 10 offers in a single day, you're probably going to sell the house for more than what you had anticipated. And so the volume of buyers versus the volume of sellers is what pushes the price of Bitcoin up and pushes the price down. And as we see more and more people getting involved, that means that we have more and more buyers that are actually part of the market. And so the natural response of the Bitcoin market is for it to go up. So I think even though it's at a $10,000 price today, this is my opinion, as we increase the exposure, as the number of users increases, I think the price will go up dramatically. I think we could see a $100,000 Bitcoin. I think we could see a $250,000 Bitcoin. I think eventually we could see $1 million Bitcoin. Now, how long will it take to reach those numbers? Hard to say. Will we reach any of those numbers in the next year? While I think it's possible, I don't think the chances are high. But will we see that happen, say, in 5 years, 10 years, 20 years? I think the chances of hitting those kinds of numbers in the longer term is extremely good. I think we have an extremely good shot at seeing those bigger numbers. Now, another reason why the $10,000 price is not important when you're making a decision about is Bitcoin a good investment is because the smallest unit of Bitcoin is 1 Satoshi. Now, 1 Satoshi equals, and this is a 0 point with 7 zeros and then a 1. It's a 100 millionth of a single Bitcoin. In other words, 100 million Satoshis equals 1 Bitcoin. And you can purchase 1 Satoshi's worth of Bitcoin. Now, if the price of Bitcoin was $10,000, today it's approaching that. We're at about $9,800. I picked 10,000 just because it's a round number. Then 100 Satoshis are worth 1 US penny. So at a Bitcoin price of $10,000 and you own 1 penny of Bitcoin, you actually have 100 Satoshis. Now, the question I had is, when will 1 Satoshi be worth 1 US penny? And that will happen when Bitcoin reaches a price of $1 million per Bitcoin. So even at $1 million per Bitcoin, anybody should still be able to afford to buy 1 penny's worth of Bitcoin by owning 1 Satoshi. And I feel that way about no matter where in the world you live. If you're poverty stricken, even somebody who's impoverished, in most cases has the ability to come up with a single penny, a single US penny. And so the fact that Bitcoin can be subdivided into such small units that even when the price of Bitcoin is worth $1 million, almost anybody in the world could still own a 1 Satoshi worth or value of Bitcoin, which at that point, at $1 million per Bitcoin, 1 Satoshi is a 1 US penny. So before we get into this, I actually had a couple other things that I wanted to show you. So let's look at the global mobile data growth. So this is the growth of how much mobile data is used from mobile phones on a worldwide basis. And you can see that this growth chart has just gone up in a very smooth fashion. And in quarter 3 of 2012, it was a small amount of data. And now in this was done in 2017, quarter 3 of 2017. Now, what I like about this particular chart is it does show you a pretty typical growth chart for something that's going mainstream. And so you can see the growth starts out slow and then it accelerates quite a bit. The other important thing about this is we're looking at mobile data, because for the majority of the world, digital phones is how they will access something like Bitcoin. Currently today, there's 7.75 billion people on the planet. And out of those 7.75 billion people, 5.19 billion are using cell phones, are using mobile phones. And so we're very, very close in terms of mobile phone usage to 5 out of 7 people have mobile phones. And this is as of 2020. This was created January 2020, and so it's the most recent numbers that I could find. And so the reason why that's important is because a lot of people are going to be buying and trading Bitcoin through their mobile phone. In fact, a consortium of businesses between the company that owns the New York Stock Exchange, they're a $9 billion a year company, Microsoft, which is a multi-billion-dollar company, and Starbucks, another multi-billion-dollar company. The three of them have come together, and they are creating a mobile phone app that will be released. The expectation is sometime in the first part of this year, 2020, sometime before second or third quarter of 2020, sometime before the summer of 2020, their mobile phone app should be available. And with such a large organization behind it, I mean, you're talking about the Bakkt exchange, B-A-K-K-T exchange, which is a joint venture between Starbucks, Microsoft, and the company that owns the New York Stock Exchange. They're releasing a mobile phone app that will let you walk into Starbucks and buy your coffee with Bitcoin. And that app will be used all over the world. In fact, just this week, the Bakkt Exchange announced that one of the other features that will be available on this app is you'll also be able to use reward points. And so if you have airline miles, or if you have reward points from your favorite restaurant or some other source, you'll be able to use those reward points with this app to purchase stuff. Because they already purchased a company that's doing hundreds of millions of dollars in reward point sales on their app. And now that they own that company, it's going to be combined with the app that the Bakkt Exchange is building. And so that's coming out in the near future. And that's why I think realizing, hey, out of the world's population, 5 out of 7 people, approximately 5 out of 7, already owning some kind of a smartphone, are already ready for apps like this, already have the ability to use today's Bitcoin phone apps to buy and sell Bitcoin. And so we're on the verge. I'm just reinforcing my point of, hey, we're on the verge of seeing global adoption of Bitcoin, but it'll come through, one of the avenues it'll come through is going to be through the use of mobile phones. All right? So another thing that I want to talk about is the Bitcoin price during 2019. So if it was too late, if you were already too late to buy Bitcoin, then just like this graph shows, the growth you would have stopped seeing growth and the price of Bitcoin would be more flat. And so let's look at last year, 2019, and even the first month of 2020 to try and determine, hey, am I too late? Did I miss the boat? Has the ship already sailed? And so when we look at 2019, on January 1, 2019, the price of Bitcoin was $3,843. Then on February 8th, Bitcoin hit the lowest of the entire year for 2019. And on February 8th, the price of Bitcoin was $3,391 per Bitcoin. Now on June 25th, Bitcoin hit its highest price of the year in 2019 of $13,796. And then by January 1 of 2020, it had dropped to $7,200. Now, the reason I'm showing you all of this is I want you to see how much the price of Bitcoin fluctuated during 2019. If it was too late for you to get involved in Bitcoin, the price would have been fairly stagnant. But instead of the price being stagnant, we saw a maximum gain from the lowest price to the highest price of 306%. Now, I don't know of very many investments that you could have seen a 306% return during the year of 2019. In fact, I've heard a lot of people say that Bitcoin was the largest, it was the asset that produced the greatest return out of all assets worldwide in 2019. And so there might be a single stock, but when you look at the stock market as a whole and call it an asset, and then compare it to Bitcoin with its 306% growth. In fact, at 306% from its low point to the high point is spectacular no matter how you price it. But even if you look at it from January 1 of 2019 to January 1 of 2020, you're looking at almost 100% gain. Now let's look at what it's done so far in 2020. So the price on January 1 of 2020 was $7,200, and the price today on February 8th, 2020 is $9,786. And so in that 1 month and 8 days of 2020, we've already seen Bitcoin do a 36% gain. Now I want to say, and this is my opinion, not financial advice, but in my opinion, anything that can do a maximum of 306 the year before and then start out with a 36% gain in the first 5 weeks of the year, that's something that's in a growth spurt, and going through these wild swings is just part of the normal process of an asset that's rapidly increasing. This is not an asset that has peaked out and it's too late, the ship has already sailed. In fact, if this plays out like you might expect it, going from, say, 50 million users to 5 billion users, that's a huge growth. We may yet see the greatest growth of Bitcoin may still be yet to happen. It may not be something that's in the past, but time will tell. Another thing that I kind of wanted to share with you, this is less about, hey, Bitcoin is not too late, but it's more about kind of getting you prepared mentally if you decide to invest in Bitcoin. And what I mean by that is even in last year, you can see these wild swings, 3,800, 13,000, and then back down to 7,200. Bitcoin has a tendency to do a massive 1,000 or 10,000 or 50,000% gain and then drop by 94% or 90% or 85%. And so you have to be mentally prepared to endure the highs and the lows of Bitcoin. And so one of the things that I did was I discovered that if you bought Bitcoin and you held it, didn't sell it, you just held on to it for 3 years, historically, there's almost no time in the history of Bitcoin where if you owned it for 3 years or longer, that you would have lost money. The people that have lost money with Bitcoin are people that bought it and then sold it in less than 3 years. And so my point is that if you buy Bitcoin, expect it to go up wildly, expect it to go down wildly, be prepared to see your investment drop by 50% or 80%. But also by hanging on, if you keep the confidence, if you keep learning more about it. That's why on my channel we have videos that we create 5 videos every week trying to give you more reasons about what's going on in the market, showing you the current news and giving you more reasons why this is a great time to invest in Bitcoin. This is a great time to stay invested in Bitcoin. So anyway, I'm not going to go over all the details in this chart. If you want to pause the video and look at them for yourself, you can. But the basic point is if you took $1,000 and bought Bitcoin and then held it for 3 years, how much money would you have made? And so on January 1, 2017, if you held it for 3 years, you would have made had $7,205 at the end of the 3 years. And so your $1,000 grew to $7,200. In fact, over the life of Bitcoin, the only time that you would have come, the worst year, let me put it that way, the worst year would be 2014 to 2016, and you only would have seen a $180 gain. Well, that's 18%. And if you see 18% on an investment over a 3-year period, that's actually pretty good. If you bought a house and held it for 3 years, do you really think it's going to go up 18%? Depending on where you buy it, it might. But there's a lot of houses, a lot of real estate you bought that you could have bought and held for 3 years that is not going to see an 18% growth. It just depends on where the house is located. And so my point is that even its worst 3-year period was actually not bad. But its best 3-year period did make $2.6 million. And so we want to understand that A, Bitcoin is extremely volatile, and B, we may not have seen its best years yet. So time will tell. All right, so we've covered the first topic, Bitcoin's $10,000 price. Let's look at the second topic, institutional investors. So most of what we talked about as far as is $10,000 too much, and is that a reason why Bitcoin is not going to go up? Most of what we talked about had to do with the perception of the retail market. Let's take a look at what are people with large money, big money, actually doing, and are they taking large portions of their investment funds and getting involved with Bitcoin? So the first thing that we're going to look at is this article about 94% of surveyed endowment funds are allocating to crypto investments, according to this study. And so 94% of endowments have been allocating to crypto-related investments throughout 2018. A new survey published on April 12th reveals. And so we'll scroll down here. Details of reported crypto fund investments from Ivy League titans like Yale, Harvard have surfaced in the fall of 2018, the latter of whose $39.2 billion endowment fund for the 2018 fiscal year was the largest of any university endowment globally. Crypto investments claims have also been made by Stanford University, Dartmouth College, Massachusetts Institute of Technology, the University of North Carolina, and more. And so this particular survey covered 150 different institutions, and they found that 94% of them had gotten involved with cryptocurrency in some form or some fashion, or they had plans to do so in the next 12 months. And with $39 billion, Harvard was the very first one that came out and publicly said they are investing in Bitcoin. And here's kind of the reason why I harp on the $39.2 billion. If you had $39.2 billion that you were using to invest in different assets, that you expect it to make money, the first thing that I want to point out is because it's Harvard and because of the amount of money that they're investing, they have some of the smartest people in the world trying to evaluate this and making the best decisions possible on where to invest money and what assets should they be investing in. And the conclusion that they came to is that Bitcoin is worthy of their money and time to invest in. And not only did Harvard come to that conclusion, but out of 150 institutions, 94% of them came to the same conclusions. And these are institutions, these are endowment funds that have millions of dollars, and many of them have billions of dollars. And so before they invest their money into cryptocurrency, they've already done a significant amount of research. My expectation, and I don't know this for a fact because I have not talked to the people at Harvard, But my guess is that they know a lot more about Bitcoin and a lot more about cryptocurrency than I currently do, and that they've investigated it quite a bit deeper than I did before I made any kind of investment in cryptocurrency. And so to me, this is a really good reason why we should consider, you and I, should consider investing in cryptocurrency and in Bitcoin in particular. Now, I mentioned Bitcoin a lot. There's only one reason for that, and that's because Bitcoin is the biggest. But really, I'm talking about the cryptocurrency market as a whole. And there's over 2,000 different cryptocurrencies out there. And so 65% of all money or all wealth in cryptocurrency is currently in Bitcoin. Bitcoin is the biggest, the market leader. And so that is why I mention it, but I'm not excluding the others because I don't mention them. I'm not excluding Ethereum, Litecoin, Ripple, EOS, or any of the other 2,000 cryptocurrencies. I'm just mentioning the biggest one at this time. So the next thing that I wanted to share with you is this article about 2019's top 10 institutional actors in cryptocurrency. And so I'm going to go over this a little faster than I had planned, because I've already been talking for quite a while. The first area is the Libra Association. So Facebook last year announced that they're coming out with their own cryptocurrency, and that their intent was they wanted to reinvent money and transform the global economy. And when Libra made that announcement, it shook the cryptocurrency industry. It shook government leaders all over the government. And they immediately brought Mark Zuckerberg into multiple meetings with governments around the world because they wanted to hear directly from Mark Zuckerberg, the owner of Facebook, about the Libra cryptocurrency that they were introducing. Now, JP Morgan Chase has their own cryptocurrency being built, and they are supposed to be rolling it out in 2019. It hasn't gone public yet, so the expectation is that JP Morgan Chase and their stable coin should become available very, very soon. The Bakkt Exchange, I mentioned them earlier, they're a joint venture between the company that owns the New York Stock Exchange, Microsoft, and Starbucks. All three of them built the Bakkt Exchange. It went live on September 24th of 2019. And because of the plans that they're announcing, it's clear that Bakkt will be a force to reckon when it comes to the cryptocurrency industry and the future. And they're going to have a significant impact on the usability of cryptocurrency getting used by more and more people. And the Bakkt Exchange itself is not available to retail investors. It's only available to institutions. And so they've because they're the New York Stock Exchange that's built this, institutions already have warm fuzzies about the Bakkt Exchange because of its owners and because of the New York Stock Exchange history and past when it comes to institutions. So the U.S. Commodity Futures Trading Commission is the ones that are regulating the non-security cryptocurrencies, and that includes Bitcoin, Ethereum, and others. And so this is another example of a reason why institutions are feeling more and more comfortable with getting involved. And then Fidelity Investments. In 2019, Fidelity Investments, the mutual fund colossus with $7.2 trillion under management, stepped up with a full rollout of its Fidelity Digital Asset Custody Unit, 4 years in the making, which targets institutional investors like hedge funds, family offices, and market intermediaries. And so this is another example of people building an infrastructure that will allow institutions to get involved with cryptocurrency. So both Fidelity and Bakkt spent 4 years and hundreds of millions of dollars building out the infrastructure required for them to be able to offer cryptocurrencies to hedge funds, family offices, market intermediaries, and other institutional size investors. Another area is the utility settlement coin project Finality International, and it's a bank consortium. So in June 14 financial institutions from the United States, Europe, and Japan collectively invested $60 million in a new company, Finality International, that will build an Ethereum blockchain upon which traders among the banks will settle using a token called the Utility Settlement Coin, backed with cash collateral deposited in central banks. And so here we have large institutions getting together and building their own infrastructures among banks so that funds can be transferred globally between the United States, Europe, and Japan using a cryptocurrency that they're building. So the next piece is Fairfax County Retirement Systems. So in February, Virginia's Fairfax County's Retirement System, FCRS, became the first U.S. pension fund to invest at least a portion of its retirement holdings, $21 million in cryptocurrency assets. The allocation through Morgan Creek Digital was just a small portion of the system's assets, given that the blockchain technology industry is still in its early stages, explained FCRS to its participants. It reportedly invested another $50 million in a second Morgan Creek Digital Fund in October. So $50 million is not a tiny investment. The Chicago Mercantile Exchange drew many of the crypto exchange headlines in 2019, but the Chicago Mercantile Exchange, CME, the world's largest futures market, notched the most Bitcoin futures contracts. At its height in May 2019, the CME was averaging $515 million in daily volume and more than 13,600 future contracts each day. On May 13 alone, Bitcoin traded a record daily volume of 33,677 contracts. That's an equivalent of 168,000 Bitcoin and was worth $1.7 billion. And so that's an example of a huge amount of institutional money moving in a single day. In a single day, there was $1.7 billion invested in cryptocurrency, via several futures contracts. So B3I Services. B3I started with 5 insurance companies experimenting with Ethereum in May of 2016. Today, the consortium encompasses 18 insurance companies and reinsurers from 5 continents, including Aegon, Allianz, AXA, Swiss, Liberty Mutual, Munich, Tokyo Marine, and SCOR, among others. And then number 10 was Harvard University. And so this kind of repeats what I mentioned a second ago when it was reported in April that Harvard University's investing arm, Harvard Management Company, which has $38.3 billion of assets under management, was making its first crypto investment. And so the involvement of institutions in cryptocurrency is actually very, very large. It's quite significant. But I think we're only seeing the tip of the iceberg, because most of the things that we just talked about in this list is stuff that just became available. The Bakkt exchange went live September of 2019, so it's not even been around for a full year yet. The same thing with CME futures and a lot of the other things that we mentioned as far as institutional involvement has not even been more than a year or two. I think Harvard is the oldest, and that was something that happened in September of 2018. And so institutional involvement in cryptocurrency is actually extremely new and only will get stronger as time goes on. So we've talked about Bitcoin's $10,000 price. We've talked about institutional investors and whales. The last section that we're going to talk about is retail investors. So I have a few more things that I wanted to cover that we didn't really cover when we talked about is $10,000 a reason that people will not purchase Bitcoin. And so let's get into it. The first reason why retail investors will get involved with Bitcoin that I wanted to talk to you about is something called the halvening. So every 4 years, the amount of money that miners make by mining Bitcoin gets cut in half. And every time we have a halvening, within about 12 to 18 months approximately after the halvening, Bitcoin hits new all-time highs. And so we can see here, Bitcoin started, back here around 2010, and we can see how it had this great big spike before its first halvening, and then the price drops down, and it continues to grow, and then we had another spike after this halvening, drop down a bit, and then its final peak, all-time high at that particular point in 2014. Now you notice we're talking about a time frame from 2013 to 2014, so it takes about 12 to 18 months after the halvening before it actually hits these peaks. And then it has a bear market for a while after it hits that peak. It has a period of where it's accumulating or basically going sideways, up and down fairly dramatically. And then a short burst, and then reaccumulation, and then the halvening is the key that kind of sets it off. And so this is somewhere in the middle of the year of 2016, and you can see the peak that it hit, last all-time high that Bitcoin had of December 2017, when Bitcoin reached $20,000, and then has dropped down since and is now just beginning to do its next bit before the next halvening. Now, the next halvening is going to happen late in May of 2020 is when we'll cross this particular mark on the time chart. So this was actually, about this mark here is about halfway into 2019. All right. So you can see that the pattern is fairly similar and tends to repeat. And so the halvening is going to be something that we're going to hear more and more and more about as we approach this date in May of 2020. And that will have a tendency to affect the retail market, because as retail investors hear about it and look at the current prices of Bitcoin and think about it, it gives people a story and a reason to consider it. And I know that history does not necessarily repeat, but we can see that in this case it has been fairly consistent. And so I have a tendency to think that we'll see something similar happening after the next halvening. The next reason is retail investors have a tendency to invest more off of emotion. Institutions, and what I'm about to say, I mean, it's not 100%. We're all human beings. We all have emotions and we all have logic. And so no matter who you are, you're going to run a course of a combination of emotion and logic in making your decisions. But when you look at retail investors versus institutional investors, institutions have a tendency to do more research and to make decisions based off of facts and numbers, whereas retail investors have a tendency to make decisions more based off of emotion. In fact, when you look at the retail market, this is kind of the emotional roller coaster that retail tends to go. In fact, this is not a cryptocurrency cheat sheet. This is a Wall Street cheat sheet looking at the psychology of a market cycle for Wall Street or the stock market, but it applies perfectly to cryptocurrency. I mean, we just saw all of these peaks and valleys. In fact, this peak was at $20,000, this peak is around $1,000, and this peak is in like the $30, $10 price range. So this is actually not a normal scale, it's a logarithmic scale. And that's why Bitcoin has seen these enormous gains, from right in here, we're talking about a 50-cent price range. Up in here, we're talking about a $10 price. Here, we're looking at closer to a $57 or $100 price. This was a $1,000 price. This is a $20,000 price. Anyway, the psychology of the market cycle goes from disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, depression, and disbelief. Now, a lot of people are still in this disbelief phase about cryptocurrency, and so they won't invest, even though we've seen a tremendous gain of 36% in the first 5 weeks of 2020. Think about that. How many investments out there went up 36% over the entire year of 2019. Not many, but we've seen Bitcoin do a 30% increase in just 5 weeks. But people are still in disbelief about Bitcoin at this point. It won't be until we start seeing more optimism, belief, and thrill as the price goes up and approaches the next all-time high. And so over the next probably 18 to 20 something months, because it'll be 18 to 24 months after the halving before we hit the next all-time high, if history repeats itself. If history repeats itself and we see the next all-time high about 18 months after the halving, as we approach that price, we're going to be hearing about it on the news. When you go to the grocery store and you're standing in line, you'll hear people talking to each other. Your grocery clerk that's checking you out at the grocery store, if you use a checkout lane where a person's actually there, you're going to hear all kinds of people that would normally never be talking about investing, talking about Bitcoin. When your hairdresser says, hey, have you heard about Bitcoin? Then you know that we're approaching this area of thrill and euphoria, and that it's gone somewhat mainstream when everybody and their brother is talking about it at the water cooler at work or at your church or just through friends and relatives. When you hear that conversation, you know that we're approaching this area of thrill and euphoria, and you may actually want to start paying attention to the prices, because that may become, you may be near a new all-time high, and it may be a good time to start selling some Bitcoin and taking some profits off the table, because you don't want to be holding on to it as it drops in price. Now, everybody has their own strategy. I've listened to a number of YouTube channels where their intent is they're just going to buy and hold forever, which is a great strategy. I have nothing against that. I just don't like these 80% drops in value and would rather avoid it and sell at this as close to the peak as I can reasonably determine it, and then wait for it to drop and get back into the market when it's at a new low. So that's just kind of my thinking about it. Everybody's is different, and it's not to say mine is better than yours. It's just different. Anyway, how can I be of service to you? Did I say anything that you didn't understand, that I need to cover with more detail, or that you have a question about? Please let me know. Do you disagree with me? And that's fine too, because you have knowledge that I don't have. I have knowledge that you don't have. And the best way for us to grow is if we share with each other. And so if you have a disagreement, please put your disagreement in the comments on the YouTube channel down below. And I'm going to do my best to reply to your comments, even if you disagree with me. So your polite disagreements are more than welcome. I encourage you to include them down below, because the only way for you and I to grow smarter is if I hear the things that you disagree with, you hear the things that I disagree with. We'll learn from each other and grow smarter together. So I want to grow smarter together with you. In the meantime, I hope that you'll like, subscribe, and hodl, and I hope that you have a fantastic day.